What if I told you the most important move in Iraq right now isn't loud, dramatic, or breaking across headlines, but quietly reshaping the entire financial system behind the scenes? Welcome back to Iraqi Dinar. If you've been in this space for years, you already know the difference between hype and structure. And what we're seeing right now isn't hype, it's structural tightening. Let's reset the noise. This week, the Central Bank of Iraq issued a clarification to banks regarding U.S. dollar transactions. All licensed institutions were instructed to treat older and newer U.S. dollar notes equally, no discounts, no selective pricing, no confusion. On the surface, that sounds minor, but in reality, it removes friction inside the formal banking system. Why does that matter? Because Iraq is steadily pushing currency exchange activity away from informal street markets and into regulated channels. When banks operate smoothly and consistently, the parallel market loses one of its advantages, confusion. And confusion has historically fueled spreads between the official and street rates. At the same time, physical cash circulation inside Iraq continues to trend lower compared to prior peak levels. Electronic payments are rising rapidly. Digital settlement systems are expanding. The central bank isn't announcing dramatic reforms, it's tightening the plumbing of the system. And that's how serious monetary transitions usually happen. Now let's talk trade, because this is where things get more strategic. The Ministry of Trade recently confirmed that import and export licensing for investors is now processed electronically within 24 hours. Not weeks. Not endless paperwork delays. One day. Customs systems are increasingly digitized, and most cross-border traded through the automated Executa platform. That level of execution signals something bigger. Iraq isn't preparing paperwork anymore. It's operating under global standards. WTO accession discussions continue, and technical files have been finalized. Whether accession happens this year or next isn't the key point. The key point is operational readiness. And here's something many overlook: the Central Bank of Iraq operates independently. Monetary decisions are not mechanically tied to WTO timelines. If the economic data supports a rate adjustment, the CBI has the authority to act when it sees fit. Meanwhile, Iraq is expanding regional transport integration. Agreements with neighboring countries are strengthening logistics corridors. The rollout of roll-on, roll-off cargo systems at key border crossings is increasing freight efficiency. Trucks are moving through Iraq with improved coordination, and port connections are being optimized. This positions Iraq as a regional transit hub, and transit hubs generate non-oil revenue. Non-oil revenue improves trade balances, and stronger trade balances support reserves, and stronger reserves underpin currency credibility. Now layer in diplomacy. Prime Minister Mohammed Shia al-Sudani recently held high-level discussions with Saudi leadership focused on infrastructure, regional coordination, and economic cooperation. Saudi engagement in major projects like the Development Road Initiative signals regional confidence. Strategic partnerships of that level don't expand unless stability metrics are improving. International institutions are also scaling involvement. Development banks and global financial organizations continue increasing activity in Iraq. Governance indicators have shown measurable improvement. Customs coordination between Baghdad and the Kurdistan region is progressing. Budget transfers tied to Nile revenue are being executed. These aren't isolated headlines. They're reinforcing signals. Now here's the development that has drawn quiet attention inside banking circles: temporary adjustments and heightened scrutiny around certain personal foreign remittance flows. While official clarification is still limited, enhanced compliance measures, expanded due diligence, and tighter anti-money laundering enforcement are being discussed. If true, that aligns with a broader pattern. Remittances represent a major source of foreign currency entering Iraq. When oversight increases, informal currency leakages decrease. And when informal leakages decrease, exchange rate management becomes cleaner and more controllable. Notice the sequencing. The parallel market gap gradually narrowing. Digital payments sharply increasing. Trade systems digitized, a compliance framework strengthened, remittance channels tightened. That is not chaos, that is sequencing. Gold reserves remain elevated. Foreign currency reserves remain substantial. Statements from central bank leadership continue emphasizing stability and closing exchange rate gaps. No overnight promises, no dramatic declarations, but steady consolidation. Here's what matters most: Iraq's financial foundation today looks very different than it did 3 years ago. Institutional reforms have been layered carefully. Compliance standards have improved. Trade infrastructure has modernized. Regional partnerships have deepened. A currency's strength ultimately reflects fundamentals: reserves, trade flows, governance stability, productivity, and investor confidence. Those inputs are being reinforced. Does that guarantee an immediate rate shift? No, responsible analysis doesn't make guarantees. But does it suggest the groundwork for credible monetary evolution is far more advanced than before? Absolutely. The key difference now is execution. Systems are functioning. International partners are engaged. Digital frameworks are operational. Quiet control measures continue tightening volatility channels. That's not speculation. That's structural progression. If you've been waiting for fireworks, you may miss the real story. The real story is discipline, preparation, layer by layer reform. Stay focused on verified data. Watch official actions, not rumor cycles. Momentum built on fundamentals tends to outlast noise built on emotion. This is Iraqi Dinar, and we're here to track structure, not speculation. Stay steady. Stay informed. The quiet progress continues.